Good morning, bonjour, welcome everyone to this LinkedIn live event. Just before we start, do not forget if you have any question to put them on the chat, and our experts today will be more than happy to answer them if we have the time. Today we are diving into one of the biggest shifts in financial services in the EU and the UK. Open banking, it's a role empowering the next era of financial connectivity. Over the last few years, we have seen open banking evolve from regulatory push to strategic enablers for financial institutions. Banks, fintech, and even non-financial players are leveraging open banking to create seamless, data-driven, and highly personalized financial experiences. But while the potential is massive, many institutions are still figuring out how to harness it effectively, from payments to credit inside, financial inclusion, and beyond. So we have a lot of questions, such as like, how can banks maximize the value of open banking? What opportunities and challenges should financial leaders be preparing for? And how is open banking shaping the future of financial connectivity as we enter in the next phase of open finance? To answer those questions, I'm joined by two experts today. We have Nicolas Degenot from SBS, which is our product owner of open banking, and Younes Bounif, Chief Product Officer from Algon, a pioneer in open banking and powered use case. Thank you both for being there today. Maybe Younes, we can start by yourself, and you can tell us more about who you are and what you are doing here.
Sure. I'm Younes Bounif. I'm the Chief Product Officer at Algon, a Paris-based fintech that is specialized in cutting-edge credit decisioning solutions. I have a background in computer science and strategic management. So what we do at Algon, the main thing that we do is that we empower or we provide lenders with solutions that help them assess credit worthiness and affordability of their customers. And our mission is to disrupt, let's say, traditional credit decisioning processes, enabling lenders to take better decisions while also effectively managing credit risk. I'm excited to be joining you today to discuss this important topic, which is open banking.
Thank you again for being here. Nicolas, please.
Thank you, Simon, and thank you, Younes, for being here. We just took the train from Bordeaux this morning, so we just arrived to Paris for this LinkedIn Live. Exciting topic. So I'm Nicolas Degenot. I'm a lead product manager for open banking at SBS. So I take care of our open banking platform from everything that has to do with making banks compliant with the regulation, but also allowing banks to use open banking to create, innovative use cases and use open banking in different aspects.
Great, this is clear. And thank you again both for traveling from Bordeaux to Paris. Nicolas, we can talk about open banking today and start with the current state of open banking because we have seen like an incredible growth, but also varying level of adoptions across different markets. Can you give us a snapshot about how open banking is evolving globally and what key shift we have seen last year?
Sure, with pleasure, Simon. So actually, just a quick reminder, open banking, what it is, right? It's just a way to securely share customer data, right, to third parties with the customer's authorization in a controlled and secure way. Okay, we've always been doing this, but in this way is through APIs in a secure way, so we know exactly what are we sharing to whom and for how long. So it creates more security and more trust in the environment when we're sharing data, right? So now, having said that, PSD2 in Europe started back in 2018 with the regulation. So it was a great push towards open data and open finance. It's what's first milestone, huge milestone in Europe. That is now going beyond that and it's trying to reach open finance in a broader aspect. Now, having said that, there were a few setbacks with this initial PSD2 implementation, let's say. Because why? Because it was only a directive, it's not a regulation. So it was put out there to all EU countries to implement in the way they wanted. So it was more like a guideline to follow to open their data. And we saw then multiple different standards coming up in different countries. In the UK we have OBIE, in France we had STET, and we have mostly all over the other countries Berlin Group as a main standard. So all of this created like an unbalanced and non-standard, let's say, approach to open banking, which hindered a bit the adoption of how fintechs like Algon could connect to open banking APIs and use that. But nevertheless, open banking has grown a lot since that. Today we are about almost 40 billion in market share around market growth around open banking usage, with about a 25% year-on-year growth. So we're seeing really good increments and exponential increment, success. Even further, with the new regulations coming that we will discuss later, that will still continue to explode and expand. We see in the UK, for example, there's today over 12 million active users of open banking, mainly driven by account-to-account payments or PFM use cases. And also, if you look at payment transactions, they have crossed over 200 million transactions per year through open banking since 2023. So that's also growing at exponential rate. In the EU, in the US as well, across the Atlantic, even though we have not spoken a lot about open banking, the US has always been also a market for open banking. It was more market driven than regulatory driven. So we let fintechs like Finicity, MasterCard, Plaid actually take the lead, but through all the ways using screen scrapping and connecting to banks in another way, right? So we are also seeing development in that I'll speak later on, with new regulations in the US coming, like Section 1033, that is pushing towards more standardization. The US has over 94 million users of their local standard, similar to Berlin Group. It's called FDX. So that's a huge milestone in the US as well, of how many connections they have around that. And finally, in Europe, we see adoption mainly through payment use cases, account-to-account payments, PFM, credit and lending use cases to improve the way we provide lending in a non-traditional way, and of course, embedded finance and platform banking that we will be speaking later on as well.
Okay, so if I'm understanding well, like the next years are going to be crucial in this market evolve, because like financial institutions that embrace open banking now will be on the best position to capitalize the opportunities ahead. Younes, is that something you agreed with?
Yeah, I totally agree with this. I agree also with what Nicolas said. So if we think about open banking, um, so open banking is at the very core of what we do at Algon. It's not just a tool. It's not just. It's really something which is extremely important. And I like very often to compare open banking with fuel for us. So like if you take a high performing engine, it needs a high quality fuel, and this is the case for our AI and machine learning based algorithms and models that need a data that is secure, that is accurate, that is reliable, and also that is up to date. And this is really what open banking is all about. So just for some history here, I mean, before 2018, it was possible to access some financial data or transactional data, but it was through screen scrapping. So screen scrapping is when I, as a consumer, give my credentials to a third party, whether it's a financial institution, a fintech, or something like that. I give them my credentials, and giving credentials means I give my login and also my password, so they can access on my behalf and extract the transaction from the bank website. So this worked more or less, but it came with a lot of drawbacks back then. One of the main drawbacks is security risk. Giving your credentials, bank credentials, to a third party, although it's a fintech, a tech company, etc., but there are risks. It comes with risks, and the fact of losing those credentials was a really big risk. The second drawback of screen scrapping is the lack of, let's say, stability. So screen scrapping is just analyzing bank websites. Whenever the bank changes the website, the scrapper was broken, and then you couldn't access the data, and that was not reliable and not scalable if you want. But this all changed in 2018 with PSD2, with this new directive. And it changed because it mandated banks to open their data through secure and standardized APIs. And it's game changing because it comes with many pros. And one of the main thing is there is no security or privacy concerns anymore. You don't have to share your credentials. You just log in or you authenticate directly through your mobile app, I mean bank mobile app, or directly on the website of the bank. The second thing is that the data quality was improved and became really reliable because it's directly pushed from the bank, from the source. There is no intermediary there, so the data became more reliable. And one of the things that came with PSD3 is that it created like an ecosystem for innovation. So since banks were obliged to comply with this new directive, many startups, fintechs were created, including Algon that was founded in 2018, to leverage that data and to propose more financial services for the benefit of consumer. So to sum it up, yeah, open banking is not just a tool for us, it's really the foundation upon which all our algorithms, solutions, etc., are built, and it's just the beginning of the story, if you will.
Yeah. Thank you, Niels. That was really, really clear. So as I understand from both of you, and stop me if I'm wrong, like open banking is a key and functional element for all these financial services. And just to add this, like I was reading a report like few days ago about like the numbers of open banking users in Europe should be around like 50 billion people by 2030. So that explains like more about like what you are explaining us this morning. And just like if we know that open banking enables a wide range of financial services, that's great. But let's break it down and talk more about like open banking. Nicolas, what are, according to you, like the top open banking use case that's bank, fintech, and even non-financial players should be looking at today?
Sure. Just before I get into that one, I just want to comment one thing about Younes' statement before. Open banking is also allowing to minimize the data that you get access. When you were scraping data, you were getting access to everything you see in the screen, right? So not only your account, but your savings, your pensions, and a lot of other things, right? So again, open banking is a way, and APIs is a great way to go specifically to the type of data that you need. So again, it brings trust and confidence of the customer that they know what they're giving. It's like a parental control when you have kids.
Yeah.
You don't want to give him access to everything. So, and that's
Yeah.
a great way, right?
When you give consent, you give it specifically on this type of data, and that's something that was brought by PSD2, and which was not existent before that.
Definitely. So that's thanks to that, we're powering a lot of use cases, right? So there's a lot of use cases out there, but if I have to sum it up to maybe the top five out there, maybe also in chronological order, when PSD2 started, we saw initially account aggregation, personal finance management use cases that were like leading the way, where you were aggregating your different accounts to have a 360 view of your financial situation, right? So you can see all your different bank accounts in one place. That allows you to then better manage your financial needs, but also it allows the bank to give you more hyper personalized recommendations, budgeting recommendations, and allow you to save in an intelligent way. And this is growing even further with AI nowadays. Another large use case was around payments. Again, it's a payment directive, even though there's a lot of things that are not payment related. But here, the account to account payments and the payment initiation aspect of it was a way to balance the credit card networks, Visa and MasterCard, and provide another rail to make payments and money flows, to lower fees, to have faster settlements and less fraud, and of course more security when you're doing payments. So this is one of the also second main large use case. And then the third and fourth are really on what Algon is doing. So there are booming in the last couple of years is around credit insights and lending. So how to take a better decisions when you're loaning money to somebody, or you just want to make an assessment of somebody's credit worthiness. So we can analyze real-time data through open banking, and through that, of course, make a decision right away, faster, in a few seconds. And is that person eligible for the product or for the service that he's requiring? So it's more inclusive. But Younes will get more into it in details of how they do it and why is it a game changer in this. The same with fraud prevention and identity verification. You can now identify somebody faster through their bank account with secure from the source information, name, last name, account numbers, and avoiding mistakes. So that's the fourth use case. And then the fifth one is a large one that I've put in here, is like everything that has to do with embedded banking. So everything that the bank can do beyond PSD2 actually, to actually expose new services and APIs to the external world, so that the ecosystem can consume those services and start doing acting on it. For example, you have now telcos, other industries, merchants connecting into bank APIs to actually themselves take that risk of that loan and in advance. Or if you need to assess somebody that is going to rent your apartment, you can right away see through their account if they're eligible for that, if their salary is correct, and you avoid fraud and all of that. And finally, you have the other side of open bank, which is platform banking, where banks are now consuming other services that are non-banking related, we see Revolut consuming travel APIs from different companies to sell travel packages, or eSIM cards for travel. So those are the main use cases that we see today that are booming in the past couple of years.
Yeah, you're right. Like as you say, credits inside fraud and securities are booming, and Younes, like open banking has changed how lenders assess affordability and risk. Can you please tell us more about like how are financial institutions leveraging this data, and why is it more effective than traditional risk models, credit models?
Yeah, sure. Great question. So credit assessment or credit risk assessment is a fundamental challenge in lending. Um, so whether we're talking about consumer loans, mortgage loans, BNPL, buy now, pay later, or even leasing, traditionally financial institution relied on credit bureau data to take decision, but this data is not granular. I mean, it comes with a lot of problems or drawbacks. It's outdated very often. You know, when you ask for information for a consumer from a credit bureau, it could be up to 2 months old. You know, and also it's not necessarily up to date, as I said, outdated, but it could be also incomplete. It gives you just a part of the picture of on the financial situation of the person or on its credit history, but not the full picture that you need. So if we take France, for instance, in France, there are no positive credit bureaus at all. So as a lender, you can just access, let's say, a partial negative information, and then lenders will base their decision based on social demographic criteria or scoring. And to give you an example, in France, for instance, if you're a student, if you're a temporary worker, if you just got a job since 3 months or 4 months or 6 months, if you're a renter rather than a homeowner, you have little chances or no chances to get a consumer loan, because this is the way they assess people credit worthiness and affordability, and which is clearly unfair and doesn't make sense and not inclusive at all. And you know, if you take countries like the UK or the US, okay, credit bureaus give you more data, but it's mainly and primarily credit history about your past payments. If you paid well a loan that you had 2 years ago, 5 years ago, 10 years ago. But what happens to those people who didn't take loans in the past years, what we call the thin file problem? Well, they're not eligible or they cannot access credit, and that's also not inclusive and unfair, because people could have a job, could have like a good financial situation, and they're not just able to access credit. So open banking is game changer in this way, that it brought a new type of data, and a data that makes sense, you know, the financial behavior of the person, and it's up to date. It's not possible to do more up to date than open banking, because if I'm applying for a loan on online, at the moment I'm applying, I share my data with my consent, and then I give the lender a current and actual picture of my financial situation, so I can be assessed based on that. Um, so think of it this way. So as a consumer, I share my bank account. There is a player like Algon, for instance, that enriched that data, and then it will bring a lot of information from this bank account, and this enables a lot of things. It enables instant decisions and fast approvals, which were not possible before. It's API based. We're able in less than 1 second to share with the lender if the person has an income, what is the expenses, calculate the affordability. And when I say affordability, it's both like a debt to income ratio, discretionary income, and this kind of things, and also to assess the credit worthiness with our models that do that. So lenders are able to take a decision right away to say approve or reject a loan. The second thing is that it brings minimal or no paperwork at all. So think of it before, if you ask for a loan, then you have to give maybe your pay slip, you give your bank statement, you give maybe your tax documents. You don't have to do that because your financial behavior tells everything about that. It tells if you have incomes, how do you spend, etc. And then we're able to analyze that. And so you can have a smoother customer journey and an approval, as I said, at the end of the customer journey. And the interesting thing that you talked about earlier about fraud. So open banking is an anti-fraud by definition, by default. If I share as a consumer my access to my bank accounts or just the transaction, basically it's 90 days of transactions. Well, I'm proving to the financial institution that I own that account. And when you think about it, the account is, I mean, the bank did a proper KYC. They know me. I give them the information very regularly. They check my ID when it expires. So it's kind of also making sure that the person that is applying for a loan is a real person and not someone who's trying to fraud, give you a false identity or a false document, which is an easy thing to do nowadays. And what I'm talking about here, it's not just a theory. It's what we see already in production with customers. If I can think of Crédit Agricole Personal Finance and Mobility, who is one of our big customers. We have also Revolut as a customer. So both of those customers today are bringing value to their customers via instant decisions or instant lending. And this is thanks to open banking and the PSD2 and the way it evolved this last, let's say, couple of years. So at Algon, we think that open banking is the key to a more inclusive and a fairer lending. And it's beneficial for the industry, I mean, for the lending industry, but also very beneficial for the end consumer as well.
Let me just add one thing quickly, just before Simon goes to the next one. Two things as well that maybe we don't highlight enough is the protection of your personal data. Before, when you go to the bank, you were giving out your pay stubs, your statements. So it's a lot of confidential information. Yeah. And when you see in countries like France, where we don't like to talk about money or how much do we earn, we're giving away a lot of information to a stranger, and we don't know where those papers will finish, right? Or who will talk about what I'm giving, right? So that again is protecting my privacy in a big way, and also allows banks to grow, give more loans with a lower risk, because now they know even better who the client is in front of them. Yeah.
Great, thank you. You both mentioned like there is a growing impact of open banking across various use cases, and we talk about it at the beginning, and you mentioned it a bit more right now. It's about like payment directive and PSD2, and of course now PSD3 as a key driver for open banking. Can you like tell us a bit more about the new regulation and how like they are shaped for the future of open banking with like different use cases in the next coming years? I don't know, Nicolas, maybe you can start on this one.
Sure. So as we mentioned, PSD2 was a great milestone. It's advancing. It has his little fallbacks and little problems, which this new regulation PSD3, which is like a package of three components. The PSD3, which is just mainly managing who are the actors that can access, who can have access with which license, like PISP, AASPs, etc., etc. Then we have the PSR, which is a regulation aspect of it, who's actually saying how to implement and what you need to do and in which way. And then you have the FIDA aspect, financial data access, which is more to a broader, larger access to open finance, to other products and services. The one big difference is that it's a regulation in this case, so it's going to be implemented in the same way at the same time across all the EU countries. So that's going to be a big game changer to bring standardizations in Europe. So that's one big change. And then the second one is trying to fix all those obstacles that we found through PSD2. And there were many of them. The first one is how to improve user experience from the end user, which maybe we didn't talk as much before. Open banking allows you to have a better experience, but today the experience is not great, so that hinders adoption. With PSD3, banks will need to respect the same sort of parity concept of, if you have your mobile app, everything you can do in your mobile app, you should be able to do through an open banking channel. If you're able to log in through your mobile app with biometrics, you should be able to log in with biometrics on open banking. So all this parity, the concept needs to be respected now. If you were able to do international wire transfers or instant payments through your channel, open banking channel should also provide you those channels. And today we see that not all banks are respecting or putting everything out there. So that's a big game changer. It's going to be there, and of course it's going to fluidify the adoption. And it's also the other big change is the liability aspect of banks, who will need to take more care of fraud prevention and make sure that whoever is connected through open banking channel is the right person, it is the client, make sure the consent is there, and bring more transparency via permission dashboards, and making sure that the end user can also see on his app, in his banking or web banking, his consents given out to different companies like Algon or different fintechs, to see, okay, I've given for this amount of days this access, and I can revoke, pause, or that specific consent. So I take ownership again of who have I shared consent with. So that's the big picture. So more secure, more standardized, and more driven towards open finance. Okay, banking will become more connected, competitive, and of course user centric. And with open finance, with the FIDA component, it's switching between financial products only to all the other products, investment, savings, insurances. So the use cases that can be built around that will be way stronger and bigger. So that's where we see in this regulation a big change, and also oversight for banks. Up to now, we have not heard a lot of banks having penalties or sanctions because they have not implemented correctly PSD2, or they've even implemented PSD2 only in a fallback way, which is still screen scraping. Now it's going to be 100% API based. So they need strong interfaces, performant interfaces, and strong interfaces to avoid sanctions, which again, the text is still in the European Parliament trilogue with the Council, etc., and the Commission, and we expect voting by after the summer of 2025, so that then banks have to implement in 18 months after.
Yeah, great. That's absolutely right. Like, it's not only about like compliance; it's also about like unlocking massive new opportunities. And we have seen, and there is again like some reports about like global open banking transaction. And from what I remember, like we are right now on like 57 billion euro transaction, and we are expecting to be over like 300 billions by 2027. So it's not tomorrow, but almost. And there is like a lot of like this introduction of PSD3 is opening the door for expansion of open finance, and financial institutions now like need to be deeper across like data and investment and etc. Younes, how do you see like the transforming opportunities for banks and lenders in the future?
Yeah, well, this is, first of all, this is an exciting moment for open banking, for Algon, and for the whole ecosystem when you think about this new regulation. So I won't be going into the details because you already talked about the different ones, PSD3, FIDA, PSR, etc. But if I have just to sum it up, I mean, it's mainly about bringing a more standardized and reliable approach, which maybe, as you said, lacked a little bit in the PSD2. So PSD3, for instance, is building upon the PSD2 and trying to solve some of the problems that were here or that are still here with PSD2. And then FIDA and PSR, the beauty of this thing is that it will open up or widen or broaden the scope, because today PSD2 is primarily about current account or checking accounts. So you could share your information that are in your checking account, but then what happens to others? If they are not part of the PSD2, but then with the upcoming regulation, as a consumer, I will be able to share information with my own consent, of course. So it's user permissioned data. I can share information about the insurance. Insurance I have, about the savings I have, if I have saving accounts. I can share pensions. I can share investment. I can share crypto investment, and this matters because um, if you think about people, there are some people who don't have a lot of money on their current account, but they are great savers or great investors in the way they invest their money in various investment options. And then we will be able to assess people based on a broader picture of their financial behavior. As I said, that doesn't include just current account, but also savings and other things. So it will bring a lot of things for the benefit of the consumer. The first thing is a more accurate risk assessment. So we're happy with what we're doing nowadays with the current account, and it's way better than credit bureaus or socio-demographic. But just imagine one moment what you can do and how precise it could get if you're able to share with your consent all your financial behavior. And then more data means more accuracy in terms of credit decisioning and credit risk management. The second thing, which is interesting, is the fact that it will bring kind of tailor-made or customized financial product for these people, because a profile of a person who has money in its current account and doesn't invest a lot is a different profile from someone, as I said, who doesn't have a lot of money on the current account, but they put a lot into savings or investments. So it opens up also for the whole market and for lenders a way to bring to market new product. There are tailor-made for new or these new profiles that before maybe they were excluded from access to credit. And then generally speaking, people would be more keen to share to manage their finances, generally speaking. And just one thing or a couple of minutes maybe talking about something new, which is the CCD2. This is the new consumer credit directive number 2 that is already at the European level. It's present, but it will be transposed into local laws country by country by end of this year. And basically the objective of this directive is, as usual, to protect the consumer, but also to make sure that lenders are doing a proper assessment of the affordability. Because today, if we take France, for instance, the affordability is mainly done on incomes. So the lender checks if you have a proper income, but they have no idea of what's going on the expenses. It's just something you can declare. If you have 1,000 rent, you could say I paid just 500, and that's okay, because they don't check that. So with the CCD2, they'll have to check both income and expenses. And to me, open banking is the right answer and is the best solution to do so, simply because there is no better way than open banking to evaluate and assess someone's creditworthiness and affordability here for the CCD2 as open banking, because it's instantaneous, it's up to date, and you can check both sides of the affordability, incomes, and also expenses, regular expenses, to calculate some kind of affordability indicators before lending to the right people. And the idea behind the CCD2 is also to protect people from over indebtedness, because if you do bad assessment of affordability, you're mainly giving money to people who should not be having this loan, and then you're pushing them behind this, indirectly to over indebtedness. So just to sum it up, these new rules or this new regulation, it will also bring a lot of new opportunities for the benefit of the whole ecosystem, but also for the benefit of the end consumer.
Great. Thank you, Younes. We are near the end of our event today. For our audience online, don't hesitate to ask questions in the chat if you have some. We will be more than happy to answer. So we talk about open banking, the past, the present, and of course the future. And we have seen a lot of like use case, regulations, evolutions, and etc. What is important is technology providers like play a big role in making open banking seamless, scalable, and secure. Nicolas, what unique values does the partnership with Algon bring to the table?
Yeah, sure. I mean, partnerships are key at SBS because we are at the heart of pushing collaboration to enable open banking and continue exploring open banking. We have a deep understanding of the banking industry because banks are our clients. So we know about their backend systems. We know about the complexities that banks have to innovate and connect to new systems. So by bringing fintechs like Algon in the picture and allowing them to have a free communication, it helps bank understand how to better incorporate such offerings and also allows them to be faster because banks have a lot in their plate. So they have 100 different regulations coming in their way: DORA, GDPR, now PSD3, and a bunch of others. So they cannot tackle everything. So we try to be that connector where we try to put banks in front of fintechs like Algon to grow, and together is the only way with collaboration to bring this ecosystem. So we consider ourselves as a catalyst here for banks, fintechs, even regulators to be able to drive the next generation of financial services. And this is where this partnership is great because it allows to highlight all of these powers that Algon brings.
Okay, great. And Younes, on like from Algon's perspective, like how does SBS help extend the reach and enhance your solutions?
Yeah. So this partnership with SBS is a great thing for Algon. I mean, it's a twofold, let's say, partnership. There is like an access for a commercial side, let's say, and there is a technical or product side. So from a commercial side, SBS has a strong presence in Europe and in the UK, and their deep relationships with the financial institution is very helpful for us to get our solution and what we do in front of a large audience quickly, and this is kind of helping us scale from a commercial standpoint. If I talk about the product standpoint, is I think that our product portfolios are complementary. So if you think about what SBS does, they do have maybe hundreds of products, but they do have a portfolio for loan origination, but they also have a product or solutions for also loan monitoring. Whereas Algon is specifically focusing on credit decisioning based on open banking data. So when we put our portfolios together, we're able to propose to financial institution wherever they are in Europe or the UK an end-to-end solution that not only covers the origination of the loan, but also the management of the credit risk and also the management of the life cycle of the loan itself. So together we're stronger. Let's say it this way.
I'm glad to hear that. I think we are at the end. So one thing is clear after what we said today is that open banking is no longer just about compliance. It's more than this. It's about building a financial ecosystem that is more connected, customer centric, and of course data driven. And that's whether it's improving risk management, creating new revenue stream, or enhancing customer experiences. Banks that fully embrace open banking now will set themselves apart in the future. So again, Younes, thank you for being there today. Nicolas, thank you for joining us too. Thank you for our audience to attend this event. I hope you find it interesting. We answer almost all of your questions. Maybe we have some question in the chat. I need to check my phone for that. Okay, let me see. I just need to find the chat. Give me 1 second. Okay. Okay, so we have a few questions, and thank you again for this. Maybe Nicolas, for you this one. Do you have a real example of banks going beyond just open banking or implementing use cases?
Okay, I'm happy it's a simple question. The hard ones will go to Younes. Now, yes, to be honest, it's now it's the present open finance and the future of open banking. It's not only in slides or marketing. We do see a lot of new banks now really creating products based on open banking. So I always take the example of Revolut because I use it on my everyday banking. And now they, as I said, I traveled to the US a few months ago. Well, they have the eSIM telco solution. So I click in one button and automatically I had my phone working with a US number. But this is a bank now selling telcos. They have now they go into loans and they use Algon in the background in France to give you up to 50,000 euros in a few seconds of credit decisioning. Right? They offer you packages for traveling, crypto, AI, enhanced automatic savings. So all of this is the future. So I don't have to do anything, and the bank is doing a lot of work on my behalf and ensuring that I get a few euros aside every month automatically in crypto or in different type of investments if I want. So that's a great way of approaching open finance.
Younes, you want to add something on
Yeah,
this?
maybe I can just add a couple of things so I can profit from this easy question. Maybe we don't have a more complex one, but just something that is funny is that at Algon we're all about open banking. So we talk about open banking every day, almost every hour with the team, etc. And this is what we're about. It's as I said, it's the fuel. And for employees perk at Algon, so when I say employees perk, let's say perks like restaurant vouchers, a gym membership reimbursement, cultural activity reimbursement, and these kind of things, we chosen to work with providers that actually leverage open banking for that. So it's not just about lending there are also other use cases. And if you're in France and you know how the industry of let's say restaurant vouchers works, I mean, some restaurants would accept or others won't, etc. Here you just have to connect your bank account. It could be one dedicated to expenses, and then the company gives each employee like a budget, let's say 100 euros per month or 150, and then you just, whenever they detect that you went to a restaurant, you went to, or you consumed like a cultural activity, you have your gym membership, then you'll get the money directly on your bank account. And this is amazing, and this is what we try to do also to help this ecosystem or this fintechs or startups that use open banking. And just to say that it's not just about lending, it's beyond that.
Thank you. I'm glad you talk about lending at the end, because we have another question, and I think you can keep the mic on this one. Can you give us like some KPI or like fact numbers about like open banking in credit lending?
Okay.
Easy
So,
question. Huh?
yeah, what I can say, let's just take the French market, for instance, something that we were able to measure in production with our customers is that compared to the old way of doing credit scoring or credit decisioning, as I said, based on just negative data, credit data, and social demographic information, if you use open banking, if you use Algon solutions and models, you're able actually to increase acceptance by 40%, which means that you could increase the people that you loan money to by 40% by using open banking and Algon solutions. But then, or you can also play on the credit default or credit risk. And what we've been able to measure is like minus 50% in terms of credit risk if you use open banking and Algon solutions. Generally speaking, you have to play on both axes with customers. I mean, customers that are let's say, happy with their acceptance, then we can play on the credit risk axis. And if they're happy with credit risk, we can do it on the acceptance. But mainly, it's a mix of both. So if there is something to remember, it's in France we're able to increase acceptance in lending by 40%, and we're also able to bring down the credit risk by minus 50%.
Great, thank you, Younes. We don't have any other question, so I think we are good for today. Again, thank you, Younes. Thank you, Nicolas. Thank you, everyone, for joining us today. And yeah, that's it.